Good morning, everyone. Thank you for joining us this morning for the How to Improve Your Risk to Reward with the Nadex Spreads. My name is Gail Mercer, and I will be your hostess for this morning. Now, before we get started, I would like everyone to take just a moment to to read over the disclaimer. And basically, this morning, we're going to be showing you the ins and outs of spreads. This is for educational purposes only and is not to be construed as trading advice, okay? Trading is risky. So just take a moment and read that over, and then we'll get started. Now, before we do get started, I've got 3 simple questions I want to ask you. And the first one is, how many webinars have you attended? Okay. And just select the one that meets the most number of times that you have attended a webinar by Nadex. Okay, I'm going to give you just a few more seconds to answer that question. I really appreciate you answering it. I've got one more I want you to answer for me. And what is your experience in trading? Are you a beginner? Maybe you have some experience, but you're still learning. Or maybe you're a very experienced trader. Just select the one that best fits you, okay? As far as your experience level. And we're going to close that one. And I've got one last question, and I promise I won't ask any more poll questions. Okay, which topic would you like to see more webinars on? Now we have about 5 choices here, and just pick the one that you think is the best choice. You know, technical analysis concepts for beginners, maybe beginner level binaries, how to design a trading plan, enter and exit a binary, or how to use the Nadex platform. I'll give you a couple of more seconds and then we'll get started real quick. Okay, I'm going to close the voting poll. Now, my name is Gail Mercer, and I have over 15 years of trading experience. I started out with a company that programmed indicators, and I became enticed by the price bar. I actually just fell in love with it. I specialize in price action, volume analysis, and divergence because I believe they are leading indicators. I'm also a frequent contributor for Stocks and Commodities, Traders World, and Top Shelf. I have been a speaker at Traders Expo, Traders World Online Expo, and the Wyckoff Volume Analysis Conference. I'm also the author of 2 books on trading binary options. My latest book is The New Trader's Guide to Trading Nadex Binary Options and Spreads. And then I also have Trading Nadex Binary Options, Keeping It Simple Strategies. Both of those books can be purchased either on my website or through Amazon.com. Now, in today's session, we are going to learn the basics of trading spreads, the differences between binaries and spreads. We're going to look at live examples using the demo platform, but I do ask that you hold your questions until we're going through the examples in the demo platform. And the reason is I can lose my train of thought, and I want to make sure you get the best presentation possible, okay? Now, before we begin, I want everybody to think for a minute because this is very relevant to spreads. When you walk across the floor, what does the floor do? Does it support you so that you can continue across your path? Yes, no, maybe. Does everybody agree that the floor will typically support you? And what does a ceiling do? If you were suddenly to jump up real high, what does the ceiling do? Does it prevent you from going higher? In other words, it acts as resistance. So the floor is a support and the ceiling is a resistance area, right? Does everybody agree with that? And this really is the core concept when you're trading spreads, because the floor is going to support price and the ceiling is going to resist your profit, okay? Now, let's look at what a spread consists of. And it's actually two prices, a floor and a ceiling. If you are going long, and that means you are buying the spread, the floor limits the risk and the ceiling limits the profits, okay? The floor is always the price on the left-hand side of the spread. If you are going short, the ceiling limits the risk and the floor limits the profit. The ceiling is always the price on the right-hand side of the spread. Now, spreads are available for 2-hour and daily expirations. Again, if you can remember that a floor always provides support and a ceiling provides resistance, that's half of your battle right there in understanding a spread. Now, this is a USD JPY chart. It's NinjaTrader, okay? Here are your spreads, okay? Now, on the spreads, if you believe that this is going to go up, then you would buy the floor that is closest to price, okay? The floors are always listed on the left-hand side of the screen. So if we look at the current price, it's 110.62, okay? The closest one to price is right here at the top, 110.60. Now, if we want to buy it, buy is always represented by blue, correct? We are going to pay 110.68 to enter a long position. That means that if I subtract the price that I paid, 110.68, from the floor level, my risk is $8 per contract. Okay? Does everybody understand that? Now, if I put this on here, this would be my floor level, and my entry price would be about here, okay? In other words, price needs to come up here for me to make money, okay? And if you look over here, this is my ceiling, okay? And it's not shown on the chart, but let's say it's up here at 111.60. Okay, so I'm going to draw a line up here at 111.60. Let's say that this moves all the way up. This number right here, the ceiling, is going to limit my profit. In other words, if it moved up to 112, my profit is still limited to 111.60. Okay? Now, what is my actual profit? My actual profit is my entry price, which is 68. Okay, so basically you have made about 92 pips. Okay, what's 92 pips? Multiply it by $1 and it gives you $92. Okay, that's how a long spread works. Okay, now if you're looking at the ticket, okay, it tells you this is your floor price, this is your ceiling price, this is your expiration, and this is the date of expiration, okay? It's telling you the price on entry to buy, it's right here, okay? Also listed right here, is 110.68. The floor price is 110.60. The ceiling price is 111.60. Your risk that you will pay on entry is $8. The profit potential is either the exit price, because you can always exit early, okay? There's nothing that says you have to stay until 8 o'clock. That is if you want to. But if you wanted to, and you can see the trade time right here at 7:05, and this is New York time. Say I decided to exit at 7:30, okay? I could do that by simply clicking and exiting the trade. So that would be my exit price minus the entry price, or if I allow it to expire, it would be the indicative price minus my exit price, okay? Now, remember I said the risk potential on entry is the entry price minus the floor price, okay? That is because on a spread, and this is what's different if you're trading a spread versus a binary at expiration is all or none, okay? A spread is not necessarily all or none, okay? Let's say, for example, in this case, I entered and it was 110.68, okay? But then after I entered, it went down to 64, okay? And it's still 110, okay? Then I've only got $4 of risk, okay? That means that $4 would be returned to my account. So this is not all or nothing. I can actually exit prior, or at expiration, the price can be at 110.64, okay? So it's not all or none like a binary option is. Now, okay. Now this is the Wall Street 30, and let's say that you want to sell a spread, okay? You need to click on the offer, okay? And again, you would want to do it at one that is closest to price, okay? So for example, the indicative price is $25.85, okay? Now, which of these would be the best one to enter? We want to go short, so which one would we want to enter? Any guesses? The fourth one down, that is correct. This is the one that is closest to price, okay? This is the current price to enter that binary, that spread, okay? Now, if you do 2,600 minus 558, that is your risk on entry, okay? Does everybody see that? Does everybody see how I calculated that? Now, let's say that you were confused, okay? And you wanted for some reason you wanted to sell this one, okay? If you subtracted that, okay, what would the risk reward be? Omar, that's what I want to show you now. And if you decided to sell, okay, the floor is going to limit your profit, okay? So this side of it, because I'm selling, is going to limit my risk. This is the profit side. If I'm selling, this is the risk side. So what is 20,900 minus 20,625? That's $275 of risk, okay? What is your profit potential? Okay, your profit potential is 25. Now, if you're okay with that risk to reward, then you can do that. Do you see that, Omar? And again, I mean, as long as you're okay with the risk to reward, you can do that one. But you have to look at risk to reward on that. The max profit is $25. If you're shorting the second one, yes. What limits the profit potential on a short? Every spread consists of the floor and the ceiling, okay? The floor limits the profit if you are trying to sell a spread, okay? This is going to limit your profit. This is going to limit your risk if you are selling. Okay? And this is what makes trading spreads at first confusing, because you have to know that it's the floor on the sell side. Okay? And again, this is where the floor is going to support price. Okay? Now, again, on your sell ticket, okay, this is your bid, okay? You want it to be as close as possible to the ceiling to reduce risk, okay? This is what increases your risk to reward ratio, by taking a very small risk to potentially make a big profit, okay? Now, does everybody understand what risk to reward ratio is? Just type in a Y or N if you understand what risk to reward ratio is. Okay, I want to make sure everybody understands, and you kind of can see it in the ticket. In this case, what I am actually saying is I am willing to risk $41 to potentially make $259, okay? So if I make $259, and this is my best case scenario, okay? If I divided that by my risk, which was 41, that means for every dollar of risk, I make $6.32. Okay? Why is that important? Okay? Because as new traders, unfortunately, most new traders will lose more than they win at the beginning because they're learning, okay? Whenever you're learning, you can expect to suffer a lot more, you know? If you have, let's say, 100 trades, okay? And let's say 50% are winners and 50% are losers, okay? If it's 1-to-1 at the end of the month, what have you made? 0. Okay? And I'm just going to put a L up here for losses and a W up here for wins or profitable, however you want to say it. Okay? All right. But what if we had 50-50, but for every dollar of risk, I was able to capture $2 of reward? Would I, at the end of the month, after these 100 trades or the end of the week, would I still make money? Yes, because the reward is heavier than the loss. Now, if I can do a 1-to-6, wow, I'm not stressing over these losses over here. Do you see that? Does everybody understand that concept? This is why we look at risk to reward ratios. This is, Van, do you understand that? Because, for example, let's say that we were making $5, okay? Just a simple example here. At the end of this, you know, if I had 6 winners and I had 1 loss, okay, I would still be ahead by $25, even though I lost a trade. So in other words, I would have $30 in the win column and I would have $5 in the loss column. 30 minus 5 is 25. So I would still be up $25 even though I had 1 loss and 1 win. This is where you're looking at numbers. And, you know, to me, everything's about numbers. All right. Now, if you were to sell this spread, okay, at $25.59, the ceiling is at $2,600, there's multiple scenarios that could play out, okay? Let's say the indicative price at expiration is $2,700. Well, you would lose the $41 you paid on entry, okay? If the indicative price at expiration is $2,200, you made $259, okay? But if you opted to exit early at, say, $25.80, then your actual loss is only $20. $21 is returned to your account from the initial risk that was paid on entry. Or if you opted to exit early at $20,000, your profit's $59. Any of these scenarios could play out. Now, the most important thing, especially when you're learning spreads, read your tickets. I encourage you to read your tickets even on binaries, okay? Because every ticket before you enter the order is going to tell you what your max loss is and what your max profit is. And this one should immediately go, oh, wait a minute, that's not right, because I'm risking $97 to make $3 and I'm going to pay $2 in exchange fees, so I'm only making $1. Do y'all see that? And this is where you're taking the time to read the ticket, okay? And the more that you do this, the more you'll be able to pick up immediately. No, that's wrong. That's the wrong direction. I don't want to go that direction, okay? And in this case, you know, look at the spread, okay? Look at the indicative, okay? Now, you see that the sell column is highlighted, okay? The indicative index is at 61. The limit is at 60, okay? This is what's showing you, no, that's not what I want to do. I might want to sell if this number were over here. So that tells me, okay, I need that number that I want to sell. I need it over on the right-hand side. The right-hand side is the ceiling. Okay, I'm looking for a ceiling at 110.60. Okay? Now, you also need to compare your spreads. All right? If you're looking prior to 8 a.m. in the morning, you're only going to see the bottom spreads. Okay? And these spreads are about 500 points. Okay? If you look at 8 a.m., then you will see another spread listed, 8 a.m. to 4:15. Okay? And sometimes the 8 a.m. can be closer to price than the ones that opened the night before. Okay? So always compare. And I even go in the 8 to 10. If I'm expecting a big move at the market opening, I would even go in the 8 a.m. and say, okay, is it better to enter the 2-hour or the daily that begins at 8 a.m. or the daily that began the night before? Okay, so really it's being able to compare all of these and see, okay, which one gives me the biggest advantage, okay? Now, in this case, you've got 2,600, and this is a daily, okay? And you're trying to buy it, okay? Now, this is very important, and some people don't realize it. I even made this mistake when I first started trading spreads. You're not paying attention to where your indicative is. You know, you see this and, oh, look, it's only $33 of risk. I'm going to jump in it, you know. But if you're looking at this, the indicative is at 589. That means that price has got to move 43 points in your favor before you begin making money. Do y'all understand that? You're already out of the money trying to enter this. And this is where time decay, if this is moving against you, in other words, price is moving down, the time decay is going to get you on that one. Do y'all understand that? If you look at this number, okay, this number is higher than the floor, but this number is not, then time decay may get you. Okay. Sometimes I'll still do it because I think the signal that I'm trading is going to push that market up. And in this case, you know, you have 8.5 hours. Okay, that's a long time. So 43 points, not that important to me. Okay. But if this was, for example, a 2-hour binary, oh, I would not want to be 43 points away from a floor or a ceiling. Do y'all understand that? And a lot of times this is doing a lot of comparisons. That's how I shop around for the spreads. Actually do comparisons, which one would be better for me at this moment with my setup. Now, here's the difference between the spread and the binary, okay? Number one, your risk to reward is usually different, okay? Price needs to move on a spread, okay? If it just sits there, it's not going to make you money, okay? On a binary, if price just sits there, you can still make money. If you went in the money or at the money, you could still make money on that binary, not necessarily on the spread, okay? Spreads need movement, okay? They need volatility. Now, binary options are great for trading flat markets because the movement is not critical to a binary. If it expires one tick in your direction, you're good, okay? If we know that we need market volatility for a spread to work, what gives us the movement, okay? What gives us the volatility? Simple, market reports, okay? And we have them just about every single week. We have a slew of market reports that are coming out. For example, today we had the Bank of England speaking. We had the average earnings index for the British pound. The Canadian had a policy report, rate statement, the overnight rate in a press conference. We had crude oil inventories. 4:15 today, we have the Canadian governor speaking. Tonight, we've got employment change and unemployment on the Aussie. So, I mean, we can actually pinpoint the exact moment that the market is likely to move. That makes trading spreads a lot easier. Now, when do you choose a binary versus a spread? Again, spreads are good for volatile markets when you're expecting major movement, okay? Binaries are great for trading flat markets and slow markets, what we consider non-volatile, non-moving markets, okay? We've had a lot of those lately. You can also do a combination when the markets are moving, when you can spot trend in markets, okay? I do a combination of spreads and binaries, okay? You take one really good trade setup and you can just build different trade types around that scenario using a combination of binary options and spreads. Now, before we go and look at the market, anyone that has any questions about binary options or spreads can always email me at gm@tradershelpdesk.com, or you can visit my website at tradershelpdesk.com. I do have a blog there that I write about a lot, so you can actually go there, click on the blog, and it'll take you straight to the blog. Now, I'm going to go over to the Nadex platform, and while I'm thinking about it, I want to show everyone, I'm already logged into my account, but I know a lot of people, when you're first starting to create these logins online and passwords, you forget your details sometimes. The quickest way, if you can remember your username, is just simply click on the forgot your login details, and they will immediately, if you fill out the form, they'll immediately send you your details. Now, you do need to know your username in order to do that, and it has to correlate with your email address. If you have, for some reason, forgotten your username and the password, or your username and the email address, then you'll have to call. But, you know, I put these, I store them all in a document, and encrypt the document, so I just refer to it. But this is a much easier way for you to actually get your username or your password reset just by going there and logging in. Now, this is a demo account. It says it right up here, okay? I'm not giving out trading advice. I entered this at 4:30 this morning, just so y'all know. And it was because of the U.S.-Canadian market report. And this is an interesting because this is about where I entered over here, okay? Probably about here, actually. Notice I have a blue line and a red line on here because I'm both long and short at the same time, okay? My price for entering the long position was at 48, okay? So on this one up here, I had $18 of risk per contract, okay? I also entered a short, okay? And that one was actually $21 of risk. On the short, it was 21. On the long, it was 18. My total risk on this per, considering I've got two positions, if I was trading one position each, would be $39. Now, there is a possibility that I would lose on both the long and the short. The probabilities of that happening today were very low. Why? The probabilities of me losing on both were very low because of these reports. That usually moves the market, okay? It's the equivalent of a Fed announcement for us, okay? So the chances of me losing on both sides of the market were slim, in my opinion, okay? And you can see it's already come down to the low, I think it was a 32.58. And again, could you exit when it made that low? Yeah, you could have exited at this bar. This is a 3-bar reversal, okay? You could have exited here, okay? And you still would have made money. And then you still have the rest of the afternoon in case it goes back up. Does everybody understand that? Would I do that on a typical Monday? No. Why not? No market reports. Without that market report today, I would not have done these spreads. And I could get them relatively cheaply. Let's say that I was trying to go in and it was $100 on both sides. Probably wouldn't have done it. Does everybody understand that? Now, the other thing is, and I have actually done some of these too. Let's say that we were losing on the short side. You could always come in and cover with the binary. I've done those types. They're more advanced, but you can do them. Where do you find a list of market reports for the week? I use Forex Factory just because I've always used it because I trade a lot of Forex, Mark. So I just use it. and it's forexfactory.com. And you can actually filter it. For example, I don't want to see the New Zealand or the Chinese or the Swiss franc. You know, I want to limit it to the Aussie, the euro, the British pound, the yen, and the US dollar, you know, and only the high volatile market reports. If I wanted to see the holidays, I could click on the white one and say apply the filter, and, you know, it would tell me if it was a holiday, you know. And these are important pieces of information to know, because, especially because we're trading a lot of currencies, you know, if the banks and everybody's closed over in the UK, you want to know about it, okay? Because it's going to decrease the volatility. If Asia is on holiday, you need to know that, because it's going to affect the Asian session, okay? So, you know, I just come up and pull up Forex Factory and look at it. There is also a way to do it for the entire week. If you go here to this week, so now you can see, okay, the G7 meetings, that does affect trading. A lot of people don't want to get into it because there's a lot of spikes during the G7 meetings. This is when, and it's a great example of when I would choose a binary. If it was Tuesday and I was trading, I'd probably be doing binaries because of that G7 meetings, okay? Let's see. Let's see what we have the rest. Okay, you can see on Friday, this is what I'm talking about. You have a German holiday, a British pound holiday, Canadian holiday. Actually, I think Nadex is also closed on Friday. But, you know, this could actually be a time when, you know, Nadex might be open, but the euro, the British pound, and the Canadian are all on holiday. What does that tell you as a trader? It's probably going to be a slow market. Okay. Thursday, we have the PPI and the unemployment and the preliminary UOM consumer sentiment. You know, the highest one out of that would be this one. Okay. Considering it's a holiday week, I probably would not use a spread because holiday weeks are slower. Okay. Any questions so far? And this gives you a way to actually plan your week in trading, okay? You could sit down with this on Sunday and say, oh, okay, there's the market report here. There's the market report here I want to trade, and that's it. Is watching the position value a good indicator to keep track of when to exit a trade? It depends on where you're at in your trading, Van. You know, a lot of times new traders, you know, beginning traders, they need some wins, you know, and that's just being honest about this. You need to feel like, okay, I'm actually getting this. I was able to bank some profits here. Okay. So in that case, for a new trader, yeah, you know, wouldn't it make you feel really good to know that right now you just made $25, you know, off of a contract? That kind of keeps you motivated to keep learning and to keep doing your thing. As time goes on, you may want to convert over to using technical analysis for exits. But it really is kind of dependent on where you are as a trader. Hedging spreads, I would have to schedule one on that one, Van. That's going to be even more complicated. How many of you have traded spreads so far? When you have a lot of orders, it's hard to see what each spread is. Well, it actually tells you right in the open positions. Okay, here I'm short, okay, and I always draw a line on my chart, okay, of where my entry price is, which is what that red line is. And then on this one, I know I'm long because I'm plus 10, so that means I bought this side and I sold this side. Are you talking about working orders, Van? I typically don't use working orders on my spreads. Yeah, I don't use the working orders on my spreads. I'm usually managing, because I agree with you, I think it gets confusing if you're trying to do the working orders and you have a lot of them. You know, I would agree with you. If you've got a lot of trades on, then that's going to be very hard to use that working orders. You know, what I do instead is just actually, and I'll show you now. Let's see, go back to normal. Let's say I want to take this profit, then I just use this window here and just go ahead and place the order. And that way I'm not having to work of it over here. And if I see one like this one, there's still 5 contracts that hasn't been filled. A lot of times I'll just delete that and go back and try to get out again at a different price. Working order is where you set a profit target, okay? For example, if I want to set a profit target on the US CAD, even though it's losing money right now, all right? One thing you have to know is where your average price, which was your entry price, where is it? It was at 33.48. So if I want to place a profit target, and again, I'm going to move this over so that you can see the average price was 33.48. I'm going to set a profit target at 3,400. Okay. And if I place that order, it's going to show up under working orders. Okay. And if it manages to get up to 3,400, which is up here, then that order would be filled. Let's go look at the USD/JPY. Okay, for example, this is the USD/JPY. It's trading at 109.46. So I'm going to open this chart and let's see if I think it's going to go up or down. And again, this is for educational purposes only. It's not to be construed as trading advice. Okay, so we're here and, well, I think that might just go down a little bit more. Okay, so I want to choose the right-hand side as a ceiling. Click on the sale. Okay, $9 of risk to make $91. I'm going to place that order. Okay. Immediately when I do this, and this is just the way that I do it, okay, I'll come over here and I'll say, okay, I entered this at 109.41. So I'm going to draw a line on here at 41, which is right here. Okay. And I'm going to customize that and I'm going to make it red. because I'm short, and I'm going to change it to a thick line. Okay, so now I'm watching my chart, and if it comes below here, I know I've made money. Now, here's the other thing you can do. I do not do this, okay, but you can do this. I can come in here. My magical number that I entered was 109.41. So I'm going to come in here, and I'm going to put 35, okay? I sold, and that means I have to buy lower than what I sold, okay? So I'm going to place the order. All right, now if you go to working orders, you can see there is a working order, and it will buy it back at 35. Does everybody understand that? And I know, you know, clients have trouble understanding the sell side, but if I sell at 45, okay, I have to buy lower than 45, okay? And that means I have to buy down here. That's why we say sell high, buy low. That's what that means. And that works even on the binaries. You sell high and you buy it lower. Does everybody understand that? Now, right here under open positions, if we actually put that statement into effect, okay, it tells me the average price is where I entered. I'm short. The price was 41, okay? So I sold high at 41. Buy lower means it has to be under 41, okay? Which is why I think I set it at like 35. So if I buy it back at 35, I made $6, okay? Any questions on this? I really encourage you to ask questions. That's why I'm here. I love answering questions. And also remember, I'm here just about every Wednesday. I think next week I'm doing a presentation on why staying in demo mode will really help you. And then the week after that, we're going into trading forex binaries and spreads. I would cancel it, Van. I mean, if you don't get filled and the market went up, wouldn't you want to cancel that order? I wouldn't want it to get filled at, you know, right at the last minute. You don't want that order sitting there, you know. A lot of times where when you're hedging, when people talk about hedging, a lot of traders actually use spreads and options to hedge positions over in the forex or the futures market. Where can you find the trading charts? You click on the chart icon right here. Now notice on the spreads, it's not going to tell you what your profit and loss is like a binary chart does. The spread is just going to give you prices, okay? Now you can add indicators, you know, any just like you would on a binary chart, but you're not going to see the profit and loss on it. Any other questions today, guys? I really appreciate all of you joining us today. I'm glad you were able to make it. I do hope you join me next Wednesday. And next Wednesday is going to be really interesting because it's, I think one of the core concepts that I see a lot of new traders will make this mistake. They go straight from a demo into their live in a week, And next week, I'm going to explain to you why you should not do that. And give you a lot of statistics that back up why you shouldn't do that. How do you register for these webinars? Very easy. Let me clear all my drawings off the chart. If you go to nadex.com, and I'll just go back there for you. If you go to Nadex, if you do not have a demo, I really, really suggest that you get a free demo account before next week so you can kind of go through why you need that demo with me. To do that, if you just go to trading platforms and go demo trading platform, you can register. It's free. They give you play money for you to trade with. It's better than losing your own money. If you want to register for any of the webinars, if you just click up here at the top where it says webinars, okay, and scroll down, why staying in demo mode will help you become a better trader is the 19th. Anywhere you see my logo, that's where I'm going to be. Usually it's every Wednesday. Okay. Any other questions? All right. If there's no other questions, I hope everyone has a wonderful weekend. And I hope you all join us again next Wednesday.